Kowalczyk, Chief Investment Strategist at SJS Markets in Hong Kong. Well, Dariusz, we heard about what Michelle was saying at the G20 summit. I mean, what do you think should be the priority of the leaders there? Exit strategy, status of the dollar as a reserve currency, the economic recovery. I mean, these are all possible issues.
I believe that the most important thing for G20 is to maintain market confidence. Investors, on one hand, have to know that stimulus programs will remain in place until private demand is ready to pick up the baton, which is definitely not yet. But at the same time, markets have to be convinced that exit strategies are there ready for the time they need to be implemented. Otherwise, there would be risk of inflation picking up or other imbalances taking place. So I think that those two factors, confidence that they will stimulate further and that they are ready to exit when time is right, is the most important thing that they can say. But we also know that they want to discuss new ways to stabilize for the long term the global financial system, in particular by introducing capital requirements for large banks. And this will also be an interesting point of debate.
The international community has been focused pretty much on China, China's economy, China's markets. What's China's role at this month's meetings? I mean, what does China want to get out of it?
I believe that China will continue to be focused on preventing the threat of inflation and irresponsible fiscal policies, in particular in the US, from undermining the dollar as well as the value of treasuries that are such a large chunk of Chinese reserves. So I believe that there will be a push from China for further clarification on the part of the US that they will indeed control their fiscal policies. But China will also attempt to make sure that protectionistic tendencies will not jeopardize its export surpluses. So there will be a lot of talk on their part, maybe behind the scenes, trying to make sure that trade barriers will not be introduced to shelter domestic economies of their counterparties from imbalances around the world.
We heard from the IMF. It said that China has agreed to buy $50 billion in IMF bonds. Do you think China is trying to make its presence felt even more in the global space?
Definitely, China is trying to capitalize on the fact that a lot of the global economic leaders, in particular the US, have suffered in relative terms as a result of the crisis. And China is seizing the opportunity to capture a bigger role in the developments of the global financial and economic systems. So a gesture like that, underwriting some of the IMF balance sheet, is definitely a smart move on their part to seize the moment and also use some of their excess reserves more productively.